I've actually been pretty good with the recordings lately. I haven't forgotten. All right, cool. I think yeah, we got about everybody on. Are we gonna cover fundamentals? Well, I guess we could just touch up on that right now. I personally myself, I don't use fundamentals at all. Like I used to have Forex Factory opened here. For those of you guys that don't know, Forex Factory is like the most used place to, give out news or whatnot. You can come over here to calendar. And then once you go to calendar, you can click this little green thing right here, whatever this is. And then you can filter out the most important ones. So obviously, if I were to go like this, there's like a bunch of news, and it's honestly, it's just so annoying. Like half of these things literally don't do anything. So I would only have it filtered out to the red ones, to the most important news. But then like it might like nothing happens, right? So for example, today in the morning, 9 a.m. Euro news. If we go to, let's say, a Euro JPY at around 9 a.m. Literally, let's see. Boom. That's when the news came out. Nothing happened, right? So I personally myself, I don't use the news at all because I don't want it to influence my trade for the better, for the not. Like I'm not gonna, like when I'm typing up my confidences, I'm not gonna be like, oh yeah, and I'm gonna take this trade because some news are about to come out or whatever, right? Like when we type up the confidences, there's no, like it has no percentage effect towards the trade, right? And I don't want it to dictate whether I should wait before or after the news. I'm just gonna take the trade whenever it makes sense. And if I happen to get in with the news, fire. And if I happen to get wicked out because of the news, fire. Like, like it more than not, price usually goes where the technicals say. The fundamentals usually just follow. And that's a fact. That's like scientifically proven by me. I'm not a scientist, but like it's just, I've seen it 100 times. Like it's literally, for example, where was it? Like, for example, here. Don't you guys remember how I explained to you guys last week? I was like, all right, guys, now we have the head and shoulders, right? And then we're going to come back, retest the neckline, and then sell. Obviously, this was all the news. Notice that, like that huge, where is it? Where is it? I think it's this one. Let's just go to the 1 hour. It's a lot easier. So you guys saw like that big sporadic move down. That was obviously news. But where did the news lead it to? To the area where we were originally going, to selling down, because the technicals show that the daily has now gone bearish. You get me? So everything is, technicals are going to lead the way. The fundamentals are just going to give it that little push. And then sometimes it's going to do this, if you get in on that, good. If it takes you out on that, it's part of it. There's really nothing you could do about it. So yeah, that's kind of like my take on news. I personally, like, I'm telling you, like, the more you guys get into trading, the more you guys are going to start removing all these things. Literally, you just start doing this. You just start taking all these things off because you don't need none of that noise. Like this right here is more powerful than you guys can ever imagine. These two lines, like that's really all you need. And then the more you obviously get into the trading, you'll get the hang of it. But yeah, Jerry, that's funny. Yeah, but yeah, I personally don't use news at all anymore. I used to do it to kind of like be on the lookout, but now it's like I don't need that at all. So yeah, that's pretty much it with the news. Let's just do like a quick recap. So basically, Euro JPY, obviously we did not get our break above this to go long. As you guys can tell, this is why we have to wait for it to go bullish. As you can see, last night we were here and I was expecting for it to come back up and then retest to go long. That didn't happen. So now we are obviously bearish, still on the 4 hour. And this is actually even good because it's going to literally go perfectly into today's class on what I'm going to teach you guys. But yeah, as of right now, we've reached our area of interest number 2. We've had a very strong daily rejection candle. Notice how when we came into area of interest number 1, no rejection candle. Area of interest number 2, perfect rejection candle. Kind of like, where is it? Is it this one? Yeah, kind of like Euro GBP. If you notice, once we came back into our area of interest, we had a rejection candle to then go to the upside, right? It's the same thing. Yeah, this is obviously GBP that went super crazy. But notice how we have the retracement to our first area of interest. You guys are seeing this, right? Like we marked this up yesterday, and then now we've had the retracement. And then notice how it looks very clean on the 4 hour, 2 hour, but on the daily, it's literally just a wick. Like it looks like nothing. So, this is playing out perfectly as well. Yeah, we had nothing marked up for that one. GJ just went crazy. NZD went crazy. I mean, did nothing. And then gold didn't make it to our area of interest, right? So basically the only ones that for me are looking the cleanest would still just be Euro JPY, because gold didn't come back all the way up to my area of interest. So I'm still waiting on that. NZD JPY, still waiting on that to come back here. So now this moves from here to here. Just keep it pushing down until you get your lower high, which I do think we will get it very soon. Let me just put this here. Creating a lower high, and then GJ is basically the same thing, right? So going into today's class, right? So we're getting very close to like kind of like the final things of like how you actually take the trade, right? So everything as of right now has been learning how to see the market, right? So I'm literally just taught you guys how to get the full top down, how to do the market analysis, how to mark up support and resistance, know whether we're bullish or bearish, know where we are in the trade. Are we at a high? Are we in the middle? Are we at the bottom? Are we where are we, right? So all we've learned right now is how to properly understand how to read the market. Now from this point forward comes the actual strategy, which is kind of crazy, right? Because like I technically, like, there's no way I could have taught you guys from this point forward without knowing what has been going on for the past 2.5 weeks, right? So let's just go over a little quick recap again, everything, right? So whenever we take a trade, we need to have minimum 3 time frames in sync, right? 3 time frames in sync being the weekly, daily, 4-hour for each one of these to be graded as a 10%, right? Today's class is going to be so easy that you guys are literally going to be like, wow, what the fuck, right? So 10%, and then we'll count this one as 10%, right? 10%. If we were to go based off of weekly, daily, 4-hour, we'll go on the daily, 4-hour, 2-hour. Then this one is going to be 10%. I think we agreed this one was going to be 5 because it's not as strong. And then this one was going to be 5 because it's not as strong, right? Obviously, this one, we're going to put it as 10, or let's just keep it as 10 just for this example's purposes. We'll get into a little bit more detail shortly, right? So this would be the strength towards your trade versus if it's going to be from daily, 4-hour, 2-hour. So we would basically call this a day trade. And then this over here can be a swing / intraday trade. Intraday trade, meaning you're going to hold the trade for 2-3 days, however long it takes, right? It could take 2-3 days. Usually within the week, it should be already ready, right? So knowing that, we already know whether the market is bullish or bearish, and we want to know what kind of trade we're going to take. So for this example, again, I'm going to show you guys how to get an A+ trade setup, and you guys on your own are going to figure out how to get a B and how to get a C, right? Because I'm going to teach you guys how to grade the trade, but I'm here to teach you guys the right way. So as of right now, let's grade this trade. I'm going to go full top-down analysis where we are on this trade and then what I need next, right? So everything as of right now is very easy to understand, right? So weekly is bullish. The daily is still bearish. As you can see, this has gone down to the downside. I mean, that's gone bearish to the downside. And then the 4-hour is bearish, right? So this is of right now. To go long, it would be 10%. Because all we have is the weekly time frame bullish, right? Again, this is if we're looking for the long. If we're looking to go bearish, we would obviously have 20%. But now, if we were to go bearish, you got to keep in mind, we're at the point where we want to buy. So going short is out of the picture. Going short was here where we were last week. Now, taking a trade that has these two confluences in sync makes absolutely no sense, because you're no longer in the sell momentum or sell territory. Does that make sense? Like it's not because whatever whichever time frames have the most in sync, it's where you are. Like now you're at the point of buying for the higher time frame. Just because these two time frames together are stronger than this one doesn't mean sells are better. It just means that you're just temporarily bearish, but you're at the area where you're looking to buy on the higher time frames. You guys are with me so far? Everything's good? Simple? Okay. So after we identify this, again, after we reset where we are, whatever, we go back out to the weekly time frame. What do we identify on the weekly? For number 2, we would put here retesting weekly area of interest. So this would be our area of interest. Let's put retesting. So this is our daily area of interest I just saw. So retesting previous weekly support, right? So sometimes the lower time frame. Yes, I got you. I'll literally get right into that right now. Right. So right now, exactly what we're doing on the weekly is we're retesting the previous weekly structure. As you can tell, this is a point where it can be used as resistance, could be used as support, and then obviously it is the previous weekly structure. You've seen this bodies. This is just what it is. Like, this is a fact. This right now is just retesting this, right? So then this is where we will go down to the daily time frame. Daily time frame, then we would type up here, number 3. Number 3 would be retesting daily area of interest. As you can tell, we are at our area of interest, a level of obviously resistance, support, whatever. You can see it more in detail because we just saw it obviously on the weekly. Next thing that you can mark off is we have daily pin bar. It's a fact, like it's literally what it's showing you right there. All we're doing right now is identifying what we are doing. I mean, what the charts are showing us as of right now, right? Oh, perfect. We have daily pin bar, rejection from round psych level, which is obviously our area of interest. So all of these things are added confluences, right? Everything's clear. We all know this as of right now. We know how to read this, right? So in order for us to take a buy right here, we need to have a higher low. Now, what do I mean by that? What does that mean, right? So let's just go back real quick to the basics. So if you are in a bullish time frame, you need to buy at a potential higher low, right? We don't know if this is going to be higher high, but we know this is the area where it has the most confluences to go up. Same thing as if this trade were to be going down, and then let's say it just shifted bullish. We can't just buy right here. We need to wait for price to come back, give us a higher low, and at this higher low, give us our entry signal to take the trade, right? Do you guys get that? Do you guys understand that? Simple? Okay. So then this is exactly why we go down now, right? So if on the daily, we've identified everything on the daily, so these two time frames right here, the weekly and the daily, are to know where we are, and we want to be rejecting these daily levels. So we need, let me put this, we need rejection from weekly, daily levels to apply strategy. So until we don't have a rejection of these areas of interest on the weekly, and then we don't identify any of these things, we can't go down to the 4-hour, 2-hour, 1-hour to apply the strategy, right? So this is exactly what I'm going to get into right now. So now us understanding that we need a higher low to take the trade, that's exactly what we're going to wait for. So the ideal trade setup is to wait for the 4-hour to create a higher low. So as you can tell right here, what we would be waiting for on the 4-hour is for it to break above this structure level. Once it breaks above it, then we would need a higher low, whether it's here, here, wherever the case is, to then take the buy. As of right now, that's what we would be waiting for right here. So we would put 5, waiting for 4-hour higher low to go long, right? So let's just put it as in a scenario as if this did create the higher low. So let's suppose that price here did just go like this, and it just created a higher high on the 4 hour, right? But on the 4 hour, it's literally just going to be looked as a move like this. You're just going to see a push like this, same way how you just see a push like this. You guys are with me, right? It gets clear. Yeah, you guys want me to slow it down? I can slow it down. As of right now, this is where we are. We are here. These lines help a lot. We are here, and then we are here. We are at a lower low. You guys are with me so far, right? So as of right now, this can just continue doing this, right? So what we need is a higher high to wait for the buy, right? We understand that we need a higher high to take the trade. We're good. So same thing kind of at the beginning. You guys remember how I kind of put this example, how obviously the 4 hour needs to go bearish in order for the daily to have the pullback. And then the daily needs to go bearish for the weekly to have the pullback. You guys remember all of this, right? Simple, clear. Okay. So it's the same exact thing with the 4 hour, 2 hour, 1 hour, 30 minutes. So when this creates now, and I'm going to go on obviously showing you guys multiple examples on it. When this now creates a higher high, making this the higher high level, right? So let's say this is the higher high. We need a higher low to take the trade. But now this higher low right here, when we go down to the 1 hour or 30 minute, this higher low pullback is going to go bearish to create the higher low for the 4 hour. Does that make sense? Very simple, very clear. So now this is where the strategy applies. You need to wait for a higher low to take the trade. So as of right now, we don't know if this is a higher low. We have no idea because this thing could just keep coming down all the way. But if we zoom in on the 1 hour, we would then wait for this time frame to go bullish, giving us a higher high, and then we take the buy at the higher low here. So this is our higher low. So now we're getting a higher low on the 1 hour and a potential higher low on the 4 hour, right? So let me kind of give you guys an example of this trade right here. I think playing out, and I'm gonna give you one of it not playing out, right? I'm gonna give you guys an example on a buy. I think this is literally one right here. I get it, a bit confused. Trust me, you're going to be confused, but I'm literally going to show you the example right now perfectly. Don't even worry. I think this might be it right here. I don't know. I literally just find these things randomly all the time. All right, look, perfect. So as of right now, we understand, right? So let's just pretend, obviously, that none of this stuff is here. Let's just focus on the circle, right? So as you can see here, again, we already know we are bullish. We know we're waiting for a pullback at or around psychological level, 160,000. We know all this shit already, right? This is like all like the thing we've been working on forever. So this is where we would go down on the lower time frame after we already have our daily doji. You guys are seeing the pattern. You guys are seeing the daily doji at the area of interest. This is where we would zoom in here. And then this is where we would understand that the 4 hour, we would need a higher low to go long. So as you can see here, we then went bearish to have the pullback. And then here we created a double bottom. And then we have a higher high, higher low. You guys are seeing that higher low? You guys are seeing how I'm not entering here. I don't want to enter here. I want to enter at the higher low. Yes, yeah, but we closed above here. So as you can see here, this higher low, this little pullback right here, where I'm going to put the arrow in, we went bearish on the 1 hour, 30 minute. I hope it lets me go back that far. Perfect. So you see right here how within that pullback, we went bearish. So you see how we went from creating higher high, whatever, lower low. This is where we need to wait for this higher high, higher low, and then we take the trade long. Is it confusing? Is it a little tricky? The whole point of this is so we're zooming in on the trade, getting a higher low so we can figure out how we get a stop loss even tighter. So at this point right here, when we have this double bottom and then we break above, this is our entry right here, because we're entering off of the higher low on the 4 hour, right? I could go on another example, right? I know. Isn't that structure? Yes, but it's just like the higher low structure within the structure. It gets a bit confusing for sure. Trust me, I know you guys are going to be confused, but as soon as all you have to wait for is that lower time frame shift. So let me see if I put it in a better example here first. What I should have done, right? Okay, so we're waiting for price. So right now we are bullish on the daily. And then once you wait for, but hold on, before I keep going, you guys see how I couldn't explain that without you guys knowing all the other stuff, right? Like it would have made absolutely no sense. You guys would have not gotten on the next Zoom call, right? So don't worry, this is what we're going to work on these next couple of days, right? So as you guys can tell, we have a higher high, and then let me do it like this. So this is the daily time frame. Daily time frame, we have a higher high. We are at this point right here, right? We are at an area of interest, and this is also around psychological level, whatever, right? You guys understand this? You guys get all of this perfectly, right? We know where we are. We know we are at an area of interest, we are bullish, and we're at the point where we have the highest probability of going up versus down. Yes, we are at a potential higher low. So this is where we would zoom in here. In here, we're going to zoom in. So we're going to zoom in right here on the 4 hour, right? 4 hour. So we're going to do it right here. So let's zoom in. So it's going to look a lot like there's a lot more noise. Let me do it again. Right? Okay, cool. So we know where we are now. I'm just going to copy and paste this. For this. Okay, watch. So we know right now that we are at a higher low on the daily, but on the 4 hour, we are bearish. We understand we had to go bearish on the 4 hour in order for this to have the pullback, right? Simple, understandable, clear, right? So like we said at the beginning, we need the 4 hour. I mean, in order for us to go long, we need to have a higher low. If we're buying at a higher low. We can't buy at a lower low. Right now, this is a lower low, right? So we would wait for our break above, giving us a higher high, right? You guys are with me so far? So now at this point, we have, whether it's 2 time frames, 3 time frames, and saying whatever, we are now going to wait for this pullback higher low, right? But within this pullback higher low, so again, we're going to zoom in again. Within this pullback higher low, just gonna do it like this, right? So it's gonna look like this. So within this pullback, let me just circle this off so you guys know exactly where we are, right? So then this is the 30 minutes. 30 minute, this could be the 1 hour, 15 minute, whatever obviously looks the cleanest. I usually tend to go to 30 minute, 1 hour. This is this push here. So let me mark it off a specific color. This is this push. So this is going to be red, meaning it's this push. This is just how it looks on the 30 minute. You guys are with me? Makes sense. Looks clear. Do you guys have any questions as of right now? Please drop it. Yeah, so right now we're not focused on candlesticks. Right now we're just focused on pure market structure. Literally just the same structure. We're just taking it down time frames, just going down, 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 down. Trust me, like this is, you guys are about to trip out right now. Just as soon as you guys get it. Okay, got it. All right, cool. So we're on the same page, right? So right now we have created this higher high. So this is the higher high on the 4 hour. Higher high on the 4 hour. And then this is the higher low Bro, I should be zoomed in this shit. I don't even see myself. Right? So then we should be here at a higher low on the 4 hour, right? So when we bring it over here, this is what it looks like, right? This is the higher high point. We're just zoomed in. It's the same exact point. We're just zoomed in. And then this is the higher low point on the 4 hour, right? This is the 4 hour. I just want you guys to kind of see it. You guys are with me? Makes sense, looks clear. So we now need this pullback, meaning we need a 4 hour higher low to go long, right? We agree to that. We need a higher low to go long. But when this is going to create the higher low for the 4 hour, this is now going to go bearish. So when this time frame goes bearish, we need to wait for this time frame to shift bullish. So then we take the buys here. So we're taking the buys on the higher low of a 30-minute or 1 hour time frame. Does that make sense? Is it more clear? So within this pullback right here, this pullback is going to be bearish. This pullback is going to be bearish. And we have to wait for this shit to go bullish to then go long. It's the same exact thing as when the 4 hour goes bearish here. And when we only take the buy when it goes bullish, which is literally what you're seeing right here, which is going bullish. Now you're doing the same exact thing just on this little leg right here. It's literally the same thing just on this little leg. So we enter on the 30-minute, 4H need to be bullish. Yes, right. So I'm going to go on and I'm going to show you guys some examples, right? So I'm going to show you guys some actual like live examples, but I wanted you guys to kind of get like that rough idea. Okay, so you guys know how this daily pullback, in order for it to happen, the 4 hour has to go bearish. It's the same thing. In order for this 4 hour pullback to happen, the 30-minute or the 1 hour has to go bearish. So you just wait for this time frame to go bullish. Same way how you wait for this one to go bullish. Now you got to wait for this one to go bullish. Watch. Trust me, you guys are about to get it. It's very easy. I want to show an example that's clear and that it's like bullish because we're going off of bullish. You see now, right? Exactly. Yeah. Watch. Perfect example. GBP, I mean USD CAD, right? So let me see here. I think a good example is actually this is a perfect example. This is a perfect one, right? So let's completely obviously disregard all of this craziness that's going on, right? So let's look at it like this. So this is where it was around the beginning of the bootcamp, right? So you guys remember we created a higher high, and then we're waiting for a higher low to go long, right? We're retesting around psychological level, area of interest, weekly this, whatever, right? We all know that. Simple. You guys get that? Clear, right? We know where we are, which is the most important part. We know exactly where we are. We're at the point where we want to buy. But now what do we need to buy, right? So it's exactly, yes, exactly. So this is where we would go down to the lower time frame, and then how, like I explained, in order for this daily time frame to have this pullback, the 4 hour has to go bearish, right? You guys are with me? Makes sense. So this has now gone bearish. But in order for us to go long, we need the 4 hour to go bullish, right? So this is where we would wait for the 4 hour to go bullish. As you see, we are lower low. So this is where we would mark off our lower high. And then this would be our lower low. So in order for us to take this trade, we need the 4 hour to go bullish, create the higher low, and then go long, right? So this is where we would wait for, boom. Now the 4 hour is bullish. You guys are seeing this, right? So the ideal trade setup is now that this goes bullish, we get this higher low. And at this higher low, when you zoom in on the 30-minute, this time frame then goes bearish to have the pullback. And then when this time frame goes bullish is when you take the trade. So once you have that 4 hour higher low leg is you take the buy. Obviously, this trade never had that pullback. That's why I never took it. but let me show you an example of a trade that did, right? Look, this is it right here, right? So let me see if hopefully I don't lose it, right? So for example, right here, let's just pretend we're at an, actually not even pretend, we're actually at an area of interest around psychological level. The 4 hour was bearish and then it shifted bullish. So now that we had this higher high, we need a higher low to go long. So as we're creating the higher low, I can guarantee you this time frame went bearish to create this higher low, which is also a left head, right shoulder, retested the EMA, whatever. So let's zoom in this right here, right? So this is where we'll go down to the 30-minute. And as you can see, you see how the time frame goes bearish to create that higher low pullback. You see it goes from bullish to then lower high, lower low, lower high, lower low, higher high. And then this is where we take the trade when the lower time frame shifts to bullish, right? I'm gonna go on a couple more examples. I know when we go down time frames, it could get a little trippy because there's like a lot going on. There's a lot of noise. The higher time frames look a lot cleaner. This guy said it's magic. No, trust me, it's gonna make a lot of sense, right? Just gotta show you guys some more examples so you guys get it. Just when you go down those time frames, they get super trippy. All right, look, for example, let's just flip it since we're doing buys. That just doesn't look right. Let me see. These examples are literally everywhere. I'm sure this is an example right here, right? I have literally no idea, but let's see. You said enter once the 30 time frame goes bullish. There's more to it. There's more than to just enter off when the time frame goes bullish. But this is the start to obviously the next classes, right? So for example, obviously here, let's say we are bullish, we have a higher high. So for example, right here, we know exactly what we're waiting for, right? We're waiting for this to come into our area of interest around psychological level, whatever, to go long, right? We know this. We know exactly what we're waiting for. So this is where we would go down to the 4 hour time frame, and then we would need the 4 hour to go bullish to take this trade. As of right now, it's bearish. So let's just suppose that the 4 hour has now created a higher high. Now this is creating the higher low. Obviously, this is not the higher high, but just for example's purposes, you see how we created this higher low pullback. This higher low pullback is where we would go down to the 30-minute time frame. And the 30-minute time frame, you see how it goes from, let me see, bullish to then bearish. It's not a good example. All right, let me find a better example. Imagine explaining this on your first boot camp when you don't even know how to like teach to anybody. Like this shit took forever, bro. Trust me, like I just a couple more examples and you guys are gonna get it. All right, let me see. All right, look, I can guarantee you this is one, like without a doubt, right? So obviously, very clean level of support, resistance, all through here, whatever. So now we create a higher high, we create a higher low at our area of interest around psychological level, 66500, resistance being used as support, daily doji, all that shit that we already know, right? So this is where we'll go down to the 4 hour. Let's see if the 4 hour went bearish to have this retracement. In this case, it didn't. So the 4 hours stayed bullish, which is even a better example. As you can see here, went high, higher high. Within this higher low, this is where it goes bearish in here. And this is where we need to wait for the shift to take the trade long. So this is where we would go down to the 30-minute within this leg, right? Because right now we are technically here, right? So right now we're waiting for this pullback into this area of interest. This is where we go down to the 30-minute time frame. And then now we know we are bearish. See left head, right shoulder, lower high, whatever. We need to wait for this time frame to go bullish to then take the trade long. So then this is where we wait for our higher high, our higher low. So see, as of right now, we are technically bearish. We need to wait for a break above this to take the trade long. As of right now, still nothing, choppy, and then boom, we get our higher high breaking above this. This is where we will take our trade here, and then stop loss under our area of interest. Is it making sense? Is it a little confusing? Trust me, I want you guys to be confused, because it's gonna take some time for you guys to get it. It's really not gonna be that easy, like at all. Like, it's gonna take some time. But I just want you guys to understand. So we skipped the 1 hour. I'm just going to the 30-minute because it makes the most sense. But look, let me show you guys a trade that we let me show you guys. Trust me, it gets pretty trippy. It's making a little sense, but it's crazy. It's very simple. I wish Ricky would be on so he would. Because I said it one way in the first boot camp that it made so much sense. It's just the lower time frame shift. That's literally all it is. It's literally the lower time frame. All right, look, for example, here. So we have here a higher high, higher low, higher high, higher low, right? This higher low is at the previous structure, area of interest, round psychological, 135, everything we already know. Within this pullback, we know we had to go bearish, right? We understand that. Simple, easy. This is where we go down to the 4 hour. We find it. And as you can tell, the 4 hour went bearish technically to have this pullback, right? So let's kind of zoom in a little bit. So you guys see right here, the 4 hour went from higher low, higher high to then bearish. So now we have to wait for the 4 hour to then go bullish again, right? So this is where the 4 hour went bullish. You guys are seeing it? Easy. Okay. So now when the 4 hour goes bullish, this pullback that happens, we need to go down on the lower time frame, 30-minute, 1 hour, 2 hour, wherever it looks cleaner. And then we need to wait for that time frame to go bullish. Picture it as if almost, there you go, Jonathan got it. Like I've seen it. Okay, so this pullback, imagine that this were to be the daily time frame. And then when the daily time frame goes bullish, we need the 4 hour to go bearish. And then this 4 hour time frame has to go bullish to take the trade long. But instead of this being the daily and then this 4 hour going bearish, we're now on the 4 hour and then 2 hour. That's literally all it is. We're just taking the time frames down. And making sense? Trust me, when I get the right example, you guys are gonna trip. So Jonathan got it. All right. So look, for example, right here, we have a higher high, we have a higher low at an area of interest. Resistance, resistance, you just support. I'm sure there's around psychological level in here. On this pullback, we don't know when it's gonna stop. We have absolutely no idea. This thing could just keep going. But what's gonna lead us, the first thing that it's gonna stop is when these time frames go bullish, because we have no idea. So this is where we'll go down to the 1 hour, 30-minute, whatever time frame feels the most comfortable. I personally like going down to the 30-minute, 15 minutes sometimes. And then you guys can see here how we go from creating lower lows and lower highs to then going bullish, then creating a higher low. So now it's literally showing us that this pullback is done. This pullback is no longer bearish. Now this pullback is bullish, indicating that it is done having the retracement. It now went bullish at our area of interest, and this is where we take the trade long. Is it making sense? There you go, Gloria got it. I saw your face, Gloria. I see it. So it's literally, you have to wait for the lower time frame shift. So again, same exact thing. Just gonna show you guys. You guys are getting it, right? So basically wait for the bullish push on the lower time frame, wait for the pullback to go on the higher time frame. Okay, I think I understood what you said. So we know we're here. We know we're on this pullback on the daily, right? So let me make this blue. It's what we've always used. So this has to go bearish in order for this time frame to have then the next push, right? Simple, we know this. But what if I told you it's the same thing, just this is the 4 hour, And then this in here is the 30 minutes. So this in here would be the 30-minute time frame. 30 minutes that we need the shift to then go long. It's literally the same thing. You're just taking the concept and then applying it on the lower time frames, right? Which time frame? 30 minute, 1 hour. So it really depends on the trade. Like, where can you identify the market structure better? Like, where are you seeing the elbows? Everything that we apply in the higher time frames now goes to play on the lower time frames. Is why I'm telling you guys, like, once you learn everything from the top down, it's easier. 100K challenge accepted. Not yet, not yet. We still got some time. It's all connecting now, right? Trust me. Give me a couple more examples and you guys are gonna get it, because this is the easiest part, because it literally tells you whether it's ready or not. Like, it's literally gonna tell you, right? So let me see, because I get excited, right? It just starts getting easier and easier and easier. So for example, let's say this trade right here, right? And again, I'm just pulling up random trades. Right here we have a level of resistance, use the support, round psychological, 6,900, everything we already know, right? So let's suppose we are here. So we are waiting for a tap of our area of interest, correct? We have our area of interest. We understand that on this daily time frame, the 4 hour has to go bearish to have this pullback, right? You guys get that? Clean, simple, to annoying, right? Repeating the same thing. So now this is where I go down to the 4 hour. Exactly what I just said. The 4 hour has to go bearish in order for this daily time frame to have the next push. So now this is where we would wait for the 4 hour to create a high or a higher high, whatever. It needs to create a push. It needs to create an indication that we're obviously rejecting this level. As you can see here, this is a lower high, lower low. That's not the cleanest lower high, but for this example, we'll just use it. And then boom, we have our higher high, confirming rejecting from this area of interest. You guys are with me on that? It's all making sense. It's all perfect, right? So now this is where we need a higher low to take the trade long, right? Is it making sense? Give me like a, I don't know, what did the IML guy, or like type 1 if it makes sense, like type 1 if it makes sense. I want to make sure, right? So I gotta, somebody type 2. Okay, cool. So we understand that now we have a higher high. We need a higher low to go long, right? So this is where we will wait for our retracement, right? We don't know if the retracement is going to happen. So this is where we waited. Oh shit, we're starting to have our retracement. So this is where we will go down to, let's say, the 1 hour or 30-minute time frame. 30-minute looks cleaner than the 1 hour. You can see here, you can't really mark this as an elbow. You can see how this time frame went from bearish to now creating a higher high. So now this is going to have a higher low. We need to buy at this higher low. But obviously, we go down to the 30-minute. We're seeing how it is going bearish to have that higher low. You guys are with me? Type 1 if it makes sense. Type 1, type 1. Just want to make sure. All right, cool. Yo, for real, you've cracked trading. No, trust me, it's I'm literally just reading the market. That's literally all I'm doing. It just takes some time to learn it. So now we're obviously bearish. So now we need to wait for this time frame to go bullish to take the trade, right? Because that will indicate to us that we are now shifting to go create a new high. So as you can tell, we have a lower low, whatever. So right now, still nothing clean. So we have created a lower low and then boom, look at our higher high. So now we've confirmed we have now shifted from this pullback from bearish to bullish. You guys are seeing that, right? Simple, clear. So this is where we go back to the 4 hour time frame. We're like, holy shit, there's a little pullback. It's retesting our previous structure level, 4 hour higher low. We now take the buy right here, put stops under the structure level, take profit at this point, And then basically at this point, you're just set and forget. But you guys are seeing that, right? Is it making sense? Again, I just found this random ass example. So the shift of the trend, look at the entry. Right now, no entries. So right now, we're not going to talk about entry signals. All we're going to talk about right now is just purely market structure, just market structure, right? Entry signal we'll leave for next week. I need you guys to understand this whole entire, like what just happened right here. Because right here, it just looks like two candlesticks. But when you go down to the 30-minute, you understand that we just went from bearish to bullish, confirming that now we're done with this pullback, meaning now we're about to give the higher push up, the push. And then you're literally seeing it right here. You're literally seeing it go from bearish to then bullish. Like it's literally right here. There's no like faking this, you know? Hot sauce, this guy said. Okay, okay, so obviously this is a clean example. We'll go on another example, right? So let's see. Let's do this. Let's do this. Let's see if if you guys are really getting it, right? And I don't expect you guys to get this at all right now. Like I really don't, right? So for example, right here, in this trade, we were creating on the daily time frame that we were going bullish, then we went bearish, and then boom, we went bullish, right? So the moment we go bullish, we create our higher high. Again, like these recordings are going to be insane. Like these, like I probably won't do another boot camp in a while. Like if anybody wants boot camp, they just watch these recordings because they're like honestly like spot on, right? So we have a higher high, same exact thing. We get our boxes, we put our box, we drag it left, and then we mark up our areas of interest. We're going to start off area of interest 1. It's the closest point. Area of interest 2. It's the next structure point. And then let's just call it area of 3, which is the next structure point, right? You guys are with me. We all understand how to do this. This is simple. It's the easy part. This is just reading the market, right? So we understand this. We don't no longer need this. We no longer need this. So we need price to come into this area, reject to go long, this area, reject to go long, or this area, reject to go long, right? We understand that? Simple. All right, perfect. So let's wait. All right, cool. Area of interest 1. We kind of broke through area of interest 1. So that's gone. We broke through area of interest 2. Now that's not gone. So now we are at our last area of interest, right? So we understand that this probably went bearish to create this daily higher low, right? Simple, clean. So this is where we'll go down to the 4-hour, and then we'll see the 4-hour. Technically, we are still bullish, which is even better. This time frame is bullish because this right here I wouldn't consider like an elbow, so it didn't go bearish. So now that we are at our area of interest, we need to have a higher high push. After our higher high push, we need a higher low to go long, right? We need a higher low to take this trade. So this is where we need to wait for some type of rejection from this area. Just because we're at our area of interest doesn't mean we could buy. We can't just buy because we're here, right? So type 1, if you guys are with me so far, everything makes sense. Okay, so we know exactly where we are. We're at our area of interest, and now we're waiting for a confirmation rejection of this area, right? Boom. This is cool. This is good. Now we have a high or higher high, whatever. We've clearly rejected this point, not liking this zone. So we can't go and buy this trade right now, because if we go and buy this trade, like our stop losses is going to be obviously not realistic. And then we don't know if this just did a market shift of structure to then just continue going down. You get me? Like we need to confirm that this retracement that happens here, that it is done once it shifts back to bullish, right? Because this just did a higher high. And there's 2 reasons why we don't take it at the higher high. 1, for stop loss purposes, because then the risk to reward makes absolutely no sense. And then 2, we don't know if this is going to create a higher low. This could have just been a pullback for then the next push down. You guys are with me with that sense? It's very simple. on why we need this pullback. Fire. Okay, cool. So this is where we would go down to the 1 hour or whatever time frame we start having a pullback, if that's the case. As you can see here, we then start having the pullback to our area of interest, right? So this is the higher low that we are waiting for. As you can see, I like the 30-minute better. 30-minute just looks better for me. Technically right now, we are still bullish within this time frame. We have a higher high, and then we have a higher low. Or if we were to mark this one up, technically we would have gone bearish at this point, and then now we body closed above this, making this bullish. So now this retracement is supposed to be done. So this is where we'll go back to the 4 hour, and then we'll notice, holy shit, we're having a higher low point retesting previous structure point. So this would be an added confluence because we have 4 hour bullish engulfing entry signal. And when we go down to the 30-minute, you see the shift in the market go from bearish structure pullback to then bullish body close above. That's our entry signal. And then basically it's set and forget from that point. Does it make sense? Is it clear? David's got it. Okay, let me just continue going. It's just, trust me, it's Ronnie said the feds are gonna come for me. But we live in a building and they can't come up the building. I think, I have no idea actually. Okay. Do you guys have any questions as of right now? I want you guys to get this. I want you guys to understand it, practice it. So let's actually go back to Euro JPY, right? Now knowing what we know, seeing the examples we've seen, what are we waiting for on the 4 hour, right? So the 4 hour, we need for it to give us this high. We need that high because we gotta know that we're obviously rejecting the area. Because as of right now, we're literally in the middle of nowhere. We're in the middle of we're in the middle of a lower low being created right now. This is literally what it looks like. Tell me that's not what it looks like. It looks like a perfect low, lower high, lower low, lower high, potential push to the downside. So what we need right now is this push. Once we have this push, we now confirmed that we are bullish. After we confirm that we're bullish, we now are going to have a bearish retracement here on the 30-minute, 1 hour time frame. And then once this shifts to bullish is when we take the trade. You guys are seeing how it's making? Is it clear now? Do you guys see how what we're waiting for now on this trade, right? Drop a 1 if it makes sense. It's clear. Fire. It's literally the same exact thing, but instead of it being on the weekly, daily 4 hour, now it's on the 4 hour, 2 hour, 1 hour, 30-minute, whatever the case is. So for example, let's say right here, this, in order for this to have this pullback, to create this pullback, I could guarantee you this went bullish on the 30-minute or 15-minute. Look at it right here. You're seeing how all these time frames are bearish, lower low, lower high, lower low. You're seeing how we now went bullish to have this pullback for the 4 hour. It's the same exact thing. Once we break above, this needs a pullback. And within this pullback, we're going to go bearish. And then we just need to wait for it to go bullish to then take the trade long. That's literally it. That's literally it. Most of the time when you take a trade or A+, how many probabilities do you have? All right, fire. Great question. So that's exactly what I wanted to, I mean, I should basically save it for like the next class, but I mean, I could get into it now, right? So let's start grading this trade as of what we have right now. So we're retesting weekly structure. Whenever you're retesting anything weekly, that's already automatically 10% because it's just higher time frame. It's stronger. Retesting daily area of interest, same thing, 10% because you're retesting a daily structure point. Daily rejection candle, which is basically this pin bar, you could just count it as a 5% because like it's good, but sometimes we don't even have a pin bar and price will reject it. So when you're retesting or rejecting a support level or structure level, it is way more important versus just a candle, right? Candles are going to form no matter what. But when we're at these areas are more crucial. And then round psychological level, you guys already know it can be anywhere from 1 to 5% because it's just an added confluence. It's like it's really nothing, like it doesn't define the trade. It doesn't matter if you're above it or not, it's just added. So you basically grade it 1 through 5, right? So once this time frame then goes bullish, meaning that now you have the 4-hour bullish, this is where this will now be bullish, making this a 20% trade. And then once, so let's just keep it going like if it were to be done, right? So then confluence 6 would be, let's just put here, six 4-hour higher low. So once we're getting our 4-hour higher high, we are then getting our 4-hour higher low at daily area of interest. And then next, what we would need is 7, which is literally the most important thing, lower time frame shift. So this is where you would wait for the lower time frames in this pullback to then shift in your favor. So then once you have the lower time frame shift, then all you need is your entry signal. And that's it. And then other than that would be, this is not like a confluence, this is just like a side note, would be time zone. That's it. And then I mean, obviously, other than that, it's just so much shit. That's why we go crazy, I'm telling you. Risk to reward minimum 1 to 2.5. This is literally everything. So so like time zone, when are you taking the trade? Is it New York? Is it London? Is it Sydney? Obviously, you're only trying to take it in these 2 time frames. You're not trying to take it in any other time frame. Which is not a confluence. It's just like a side note. So yeah, take a screenshot of this, take a picture, do whatever you guys have to do. But this is your trading plan. Obviously, we're going to build that out a little bit more as we go. But if I were to continue to grade this, so let's just continue for this example, I would add this because we're getting a higher low at our area of interest, meaning the 4-hour just went bullish and now we're retesting that area of interest again. I would add this to be another 10%. Then this lower time frame shift, honestly, for me, is probably one of the most important things because it's obviously indicating that we're bullish. This would be also 10%. And then for me, anywhere your entry signal is important, but it's like it does define the trade, but I would make it anywhere depending on the type of entry signal, anywhere from 1 to 10%, because you can have a rejection candle, you can have an engulfing. There's some entry signals that are obviously stronger than others. And then this is where you just talk to your trade. So if we were to add this whole entire trade up, as if all of this were to be built, it should be 20, 30, 40, 45, 55, 65, 75, and then if we have a bullish engulfing, 85. So you guys are seeing how this would now be a B setup or B plus. If we were to add this, the daily bullish, now this would be a 95% trade setup, making this an A plus. You guys are seeing the power of this, right? You guys are seeing how it's insane. Like this right here removes FOMO, removes fear, greed. Like, bro, if the trade's here, if all of these things lined up, you're taking the trade. It's really that simple. And when you grade your trade, let's say you don't have a, let's say you don't have a daily pin bar. So that comes off. Let's say you don't have around psychological level, that comes off. And let's say you don't have a retest of a weekly structure level, that comes off. Then you do your trade. So let's say you have these 3 time frames in sync, just because we've found examples like this. This would be 30, 40, 50, 60. So now this is technically a D trade. 60 is a D or an F, some shit like that. Honestly, I have no idea. But to my point is the trade doesn't make as much sense as the other ones, which obviously require a lot more patience. You guys are seeing how we're kind of building the trade, how everything is like literally creating itself. This has taken me so long to learn, and then even longer and more frustrating to explain. So I do understand, and I do agree you guys probably won't understand this part today. We've been going over this for the past 2 weeks. You know, keep that in mind. We've been going over this every single day for the past 2 weeks, repeating and going over what we taught on the first week. So like every single week, we like recap everything from last week and then start on this week. So I could guarantee you when we started off the first week, that shit was confusing. But then we went to the next week, we would recap this and then touch up on this. And then we would recap this and touch up on these two things. So now we're at the point where we're gonna recap on all of this and then teach on this. So you guys just need this repetition so you guys completely understand it, right? But as of right now, all we are is right here. We're not at the entry signal yet. That's strictly for last week. You guys could completely exit that out. All we're understanding right now is the lower time frame shift. And we need to understand that once we are at our area of interest, we just need a lower time frame shift. That's literally it. So let me show you guys another example, which I think we had it on gold, right? So you guys understand. Wait, before I keep going, what do you guys think of this? How do you guys see it? Is it clear? Drop a 1 if it makes sense. Drop a 2 if it doesn't. Be completely honest. Clear, fire, fire. So far, no 2s, which is honestly amazing. 1.5, fair enough, fair enough. I know I'm glad. I have a question, just want to make sure I'm getting it. If price breaks the past area of interest 1, does it make that zone valid? Great question, Jonathan. Clear, 1.5, awesome. Of course, Johnny, no worries. So they asked the question of once it breaks area of interest 1, is that zone invalid? So for example, in this case, no, because you don't want to directly buy into this level, because you can obviously see that whenever you're under it, you're clearly rejecting it. You're under it, you're clearly rejecting it. So you want to buy above this level, but this is the level where you can have the lower time frame shift, and then you can buy it here, obviously at this level. And then ideally you would want to have your first take profit here, like at least to go break even, because remember, this is an area where price can come in and then reject. But if price does break above and then retest, this is where you get your other entry to go to the upside. So to your point, once we break through this zone, does it make it invalid? Not really, because it is still a very well respected zone in the past, right? Where's an example where this happened? I think it was on, yeah, for example, GJ. So like, let's say we were, let's say, for example, right here, let's say we obviously are at an area of interest, we're around psychological. That doesn't mean you can just buy like right off. Like, yeah, you can, but your first take profit has to be at the area where price is obviously respecting support and resistance. So it's like your first area where you look to get out if shit hits the fan. Like, it's just an area to keep in mind. Can an A+ trade setup still not go your way? 100%, bro. Like, bro, you can have everything you want and that should still take you out. Like, that doesn't mean anything, bro. It just means that the trader just has it. Like, remember when we at the beginning, I literally told you guys it's either gonna go up or it's gonna go down. It's literally all we're doing right here is building up a higher reasoning why it's going to go up versus down. That's literally it. That's all we can do. And all we can do is just point out the facts on why this is gonna go up versus down. That's all we're doing. And like 6, 7 times out of 10, it goes our way because we're building a trading plan through it. So I know this is probably a little bit confusing on day one. Let me see. Let me go on this example right here, right? So I think this one should clear it up. So you guys understand that we have a higher high on the daily time frames, and then we have a higher low, retesting previous structure level, round psychological, 140,000, whatever, right? So we know where we are on this trade. We know exactly what it is, right? We know this, we understand it, it's clear, right? So then this is where we would go down to the 4 hour. And then we understand that the 4 hour has to go bearish in order for it to come to this area of interest. You guys are with me? Simple, right? So now we need the 4 hour to create a higher high or a high structure point. Just reject this level. Until you can't reject this level, we can't do anything. Like we need some form of rejection. Once we reject it, let's wait for our rejection. So as of right now, we are still bearish. So now we need this to go here, create a higher low to go long, right? Simple. So then that's exactly what we're waiting for. Boom. We get a higher high. Once we get this higher high, notice how we're waiting for that wick right there. That's the higher low we need. So this is where we would go down to the 30-minute. And obviously this happened here a bit too fast, so it's probably gonna confuse you guys, but that's the exact higher low we needed. You guys are seeing how it happened within one wick. We body closed above this zone. So let's say this is a lower high, right? Let's make this the lower high. And then let's make this the lower low. Once we body closed above this structure point, this is now the higher high. And now we're waiting for that wick higher low to go long. That's our higher low right there. That higher low obviously should have looked a lot cleaner, should have been some little structure point, but when that structure point goes bullish, then we take the trade long. Simple, right? Does it look clear? The more examples we keep it going, the simpler it's gonna get. Trust me, when you watch the recordings again, it's gonna tell you everything right there. But it's literally the last piece of the puzzle. Once you understand this right here, once you understand what is going on here, because the hardest thing to understand is where are we up? Are we down? Are we in the middle? Like where the hell are we? After you understand where we are, it's just a matter of finding the lower time frame shift and then going with the trend. It's literally it. Do you guys have any questions, any concerns? Trust me, we're gonna keep it going. All right, look, I'm just finding these examples everywhere. Like it's literally everywhere. So we have here, obviously, a higher high, higher low. This 4 hour higher low went bearish on the lower time frame. You guys know this, right? This right here, in order for this to have the higher low, it had to go bearish. This is where we'll go down to the 30-minute, 1 hour, 2 hour, whatever looks the cleanest. Just the 30-minute tends to look the cleanest. Could we do? Yes. So then this is where you see how it goes from high, low, high, boom, lower, low. The moment we body closed above, making this a higher high, confirming that now this is no longer bearish, that is our trade right there. Obviously, this candle was a little bit too big. Ideally, we would have wanted it like this is a trade we would have taken around here. And then our stop loss right under, right? Stop loss placement, entry signals, that's all something completely for next week. First, just more understand what is going on right here. So for today's homework, I want you guys to get into your groups and then find me a trade that did exactly this. Find it. If it's for a sell, cool. Longs obviously are the examples that we're using today. All right, let me just show you guys one more example, right? Because I'm literally seeing this shit everywhere. Like it just fucking drives me crazy, right? So we have here a higher high. This is a higher low at our previous structure point, whatever. This higher low pullback goes bearish on the 30-minute. As soon as it goes bearish, you see how then it goes bullish. So lower low, high low, bullish, and there's the shift. You guys see it? Simple. As soon as it has that shift, that's where you go back out to the 4 hour. And then what a coincidence, there's a shift structure and then a 4-hour bullish engulfing, confirming, rejecting from the previous structure point. You guys are seeing it, how it's all like tying together. Perfect example. Yes, it's literally the perfect example. Like, so the shift is confirming that the old trend, the shift is confirming like this shift, like this bearish structure, the shift is confirming that this pullback is done. Same like no difference from the 4-hour and the daily. Like once this is going bearish on the 4-hour, once this goes bullish, it's no different from the lower time frame. It's literally the same exact thing. Awesome. There's a bunch of ones. Yeah, as of right now, this is the only setup I personally see that looks clean. We just gotta wait for this to go bullish, then the higher low, and then take the trade long. So for tonight's homework, find me a trade, like go in the past and find one that, because I want to make sure you guys understand it. So go on any pair, get in your groups, and then find me a trade that has this. Obviously, it doesn't have to be full 30%, could be a 20, but find me a trade that has retest the rejection from weekly, daily area of interest, gave you a daily rejection. It doesn't have to have a round psychological level. That's just an add-on, but it gives me a trade that has this right here, the 4-hour higher low, and then the lower time frame shift at that higher low. Let's stop the recording here. So if you guys want to come